Okay. This is a lecture about the recent ABA ethics opinion put out at the end of April, April 29th in 2020. This is a formal opinion 491, and it's about obligations under Rule 1.2D to avoid counseling or assisting in a crime or fraud in non-litigation settings. Please note for my students that this particular opinion does not apply to litigation settings or litigation clients, only to transactional work. And these ethics opinions are important to review for a couple of reasons. First of all, the MPRE almost always includes one or two questions that are based on recent ABA formal ethics opinions, like let's say from the last 5 years. And if the ethics opinion is one of the few that includes hypotheticals, like sort of hypothetical scenarios and then an answer, those hypotheticals are very easy to turn into multiple choice questions. And honestly, I use them, I have adapted them to test questions on my own final exams for professional responsibility. The other reason to look at this is that it ties together one rule that sort of really explains it, and then shows ways that it's connected to a lot of the other rules in the course. And this can be a good way to get a little like preview or taste of what's in store when you take professional responsibility, or to review if you've had the whole course, because it's going to hit on several rules and kind of go in depth with one provision that we might have spent only a few minutes on in class. Okay, so in the background, we're talking here primarily about, or our starting place is 1.2D, which prohibits a lawyer from advising or assisting a client in conduct that the lawyer knows is criminal or fraudulent. Generally speaking, 1.2 is about the allocation of responsibility and authority between the lawyer and the client, like who makes which decisions and when do you have to ask the client about things and when you can just kind of use your own professional judgment. But at the end of that rule, there's a provision saying that you're just never allowed to advise or assist a client in something that you know is criminal or fraudulent. Now, the model rules define knowledge or know as actual knowledge, not just a hunch. On the other hand, it says actual knowledge may be inferred from the circumstances, including a lawyer's willful blindness to or conscious avoidance of the facts. And this old drawing, by the way, was supposed to be two medieval lawyers. You get the idea. Now, here's where the opinion kind of takes us a step further and creates an affirmative duty for the lawyer to inquire about what's really going on. So accordingly, where facts known to the lawyer, this is a quote from the opinion, establish a high probability that a client seeks to use the lawyer's services for criminal or fraudulent activity, the lawyer has a duty to inquire further to avoid advising or assisting such activity. So if the client tells you something and it sounds fishy or sketchy or suspicious, you actually need to ask some questions like, what is really going on here? On the other hand, this is not a freestanding blanket obligation to scrutinize every client for illicit ends, irrespective of the nature of the specific matter and the attorney-client relationship. So please keep in mind, we're not saying that you need to be suspicious of all of your clients. Lots of your clients are going to know really well, and the transactions are going to be straightforward and kind of obvious. So we're not trying to say that you have a duty to be suspicious of everyone or paranoid of everyone. Now, please note that this can apply to and implicate a lot of rules. So even if the information learned in the course of a preliminary interview or consultation or during representation is insufficient to establish knowledge under 1.2D. In other words, we won't be able, it's not quite enough that we can infer actual knowledge from the circumstances. Other rules might require the lawyer to inquire further in order to help the client avoid crime or fraud, to avoid professional misconduct, and to advance the client's legitimate interests. So what other rules are we talking about? The duties of competence, diligence, communication, and honesty, and these are under rules 1.1, 1.3, 1.4, 1.13, 1.16, and 8.4. And again, part of the point in recording this little video and going through, or students reading through this particular ethics opinion, is that it's a nice review of several different rules and how they interconnect. Now, let's say you ask the client some follow-up questions like, what's really going on? And they say, it's none of your business. So if a client or prospective client refuses to provide information necessary to assess the legality of the proposed transaction, the lawyer must ordinarily decline the representation, if this is an initial consultation, or withdraw under Rule 1.16. In other words, it's not good enough if the client says, you know what, that's not for you to worry about it, or we don't want to disclose that, or you're better off not knowing, or something like that. If you get that type of answer from the client, then you need to drop that client. You actually have an ethical duty to. So what prompted the ABA to put this out? Well, we've had, in the wake of media reports, including an expose episode on 60 Minutes, some long feature articles in the New York Times and Wall Street Journal, disciplinary proceedings, criminal prosecutions, and reports on international counterterrorism enforcement and efforts to combat money laundering, the legal profession has become increasingly alert to the risk that a client or prospective client might try to retain a lawyer for a transaction or other non-litigation matter that could be legitimate, but which further inquiry would reveal to be criminal or fraudulent. And so again, there's been some high-profile featured news articles and so forth, even about prestigious Wall Street firms who basically are providing escrow account services for terrorists, suspected international terrorists or drug dealers and things like that. And it sure looks to everyone else like they're helping these people launder money with their client trust accounts and so forth. But the firms insist that everything they're doing is technically legal. So here's a couple examples. A client might seek legal assistance for a series of purchases and sales of properties that will be used to launder money. So if you're not really familiar with how criminal organizations launder money, one of the ways is to buy make a series of real estate purchases and have the same money pass from transaction to transaction. Or here's another example. A client might propose an all-cash deal in large amounts and ask that the proceeds be deposited in a bank located in a jurisdiction where transactions of this kind are commonly used to conceal terrorist financing or other illegal activities. And so if the client comes to you and they say, I want to give you a lot of money in cash, like tens of thousands, hundreds of thousands of dollars, and I want you to put it in an offshore account for me, you should have some questions, ask some follow-up questions about where's this money coming from and why are we doing this? So if the lawyer who has knowledge of facts that create a high probability that the client is seeking the lawyer's services in a transaction to further criminal or fraudulent activity has a duty to inquire further to avoid assisting that activity under Rule 1.2d. And failure to make a reasonable inquiry is willful blindness, punishable under the actual knowledge, the standard of the rule. Or to phrase it the way they do on MPRE questions, could the lawyer be subject to discipline for not asking more questions? And the answer is yes, you could be subject to discipline for willful blindness. Now, this is whether the facts known to the lawyer require further inquiry will depend on the circumstances. Now, let's talk about those other rules for a moment. 1.1 is a duty of competence. And basically, if you're not going to get all the information and facts from your client, you might not be providing competent representation. 1.3 is diligence, the duty of diligence. And again, diligence, sometimes it includes asking a lot of questions and getting all the facts you need. 1.4 is communication. How are you going to advise a client about whether what they're doing is illegal or the legal consequences if you don't know all the facts yourself? 1.13 is about representing organizations and protecting what's in the best interest of an organizational client. Rules 8.4 B and C are duties of honesty and integrity, and 1.16a is a duty to withdraw. So now the ethics opinion itself kind of spends some time discussing each of these rules as it relates to things like money laundering and how each of these rules has an implied affirmative duty to inquire for lawyers. And my students might want to take a look at that to deepen their understanding of those rules, and just to kind of review. Those are big rules that we cover in the course. So now further inquiry under these rules serves important ends. It ensures the lawyer is able to provide the informed advice to which the client is entitled, and that the representation will not result in professional misconduct, and that the representation will not involve counseling or assisting in crime or fraud. So what are the circumstances that trigger a duty to inquire? And the opinion gives 8, which is really annoying. It's hard to fit on one slide, sorry. The identity of the client, the lawyer, how familiar are you with the client? The nature of the matter, is this frequently something that's always associated with crime and fraud, like it looks like money laundering? By the way, for my students, if you're not familiar with it, $10,000 deposits or transactions in banks or wire transfers trigger government reporting. And so if the client is specifically asks you to send things in increments or deposit things or transfer things in increments less than $10,000 for a transaction that in total is going to be a lot greater than that, that's the nature of the matter, what we're talking about. Relevant jurisdictions, if it's, is this a country that's on our list for state-sponsored terrorism, our government's terror watch list. The likelihood and gravity of potential harm, the depth of the lawyer's experience in the relevant field of practice, reasonableness of trusting this client, and any other factors traditionally associated with providing competent representation in the field. Now, the big issue with this is the duty to inquire. And I want to tell you, when I first saw this ABA ethics opinion, this is why it's noteworthy, is that it might mark a significant change on the part of the ABA. It's not quite clear. So what's happened is, and there's a few documents going on here that are a little bit in tension. The ABA committee rejects the view that the actual knowledge standard of Rule 1.2d relieves the lawyer of a duty to inquire further, where the lawyer is aware of facts creating a high probability that the representation would further a crime or fraud. And this is in contradiction to the restatement. Please note that the model rules usually align with the restatement of the law governing lawyers, and the ABA is taking the position that on this one, the restatement actually gets it wrong, because the restatement says actual knowledge is required, and that doesn't imply a duty to inquire further just because crime is probable or suspicious. Also, there's been a series of documents about this, and one is in 2010, the ABA put out a voluntary good practices guidance for lawyers to detect and combat money laundering and terrorist financing. And this is usually called the Good Practices Guidance document from 2010. And this advocates a risk-based approach to avoid assisting in money laundering or terrorist financing. This is best practices from the UN Financial Action Task Force on Money Laundering, or FATF. In 2013, the ABA put out a formal ethics opinion 463. So please note, we have the good guidance document in 2010, and we have formal ethics opinion 463. I need to tell you, in the background of this there's an international treaty on money laundering, to combat money laundering, that the United States kind of made a bunch of other countries sign, and then we didn't ratify it fully ourselves, because it includes a gatekeeper function for lawyers, that lawyers have a legal duty to inquire about the undisclosed beneficiaries of transactions and to report suspicious activity. And the ABA actually pushed back against that and lobbied against that, and then put out this opinion as sort of a compromise, saying that they're resisting efforts to require US lawyers to perform gatekeeping duties. And they're saying the rules don't require a gatekeeper role for lawyers or mandatory reporting on suspicion of a client. On the other hand, it harkened back to the good practices guidance from 2010, 3 years before this ethics opinion, and an older informal opinion that my students don't need to worry about. Basically saying that there could be ethical duties to inquire further, and that maybe lawyers should do that even though we don't want them to be legally required to. And so here's a quote from that: "An appropriate assessment of the client and the client's objectives and the means for obtaining those objectives are essential prerequisites for accepting a new matter or continuing representation as new facts unfold." So they're basically saying they think lawyers are already making the inquiries they need to just to provide the representation. The Good Practices Guidance encourages all lawyers to perform basic due diligence, client due diligence, through three things. One, identifying and verifying the identity of each client. So if somebody comes to you and they say, "Hi, I want to be an anonymous client," or "I'm an LLC," or something like that, or you suspect that they're actually hiring a lawyer under a fake name, you need to verify the identity of your clients. You need to identify and verify the identity of beneficial owners of the client, which is defined as a natural person with ultimate control when such analysis is warranted from a risk assessment standpoint. What are we talking about? A nondescript LLC, something that's like ABCD LLC or 1234 LLC. You have a duty to figure out who's behind that. And if it's a shady operation, there's going to be another LLC that owns that LLC, and then two LLCs that own the intermediary LLC. But eventually behind all of this, there is a real person, and you as a lawyer should probably figure out who that is. And then obtain enough information to understand the client's objectives, business, and circumstances. Now, if a client, some clients are going to say, yeah, I'll get that to you, and then string you along and never answer your questions. And so if they temporize and fail to provide the requested information or provide incomplete information, you must remonstrate with the client. In other words, get them on the phone and kind of tell them off or lecture them. Look, you have to tell me this. And if that fails to rectify the information deficit, the lawyer must withdraw. This is a very significant point for students to learn for testing purposes, because that is a point where it triggers kind of an actual duty to withdraw or drop the client. Is you've requested information and they're saying, and either they said, "We're not giving it to you," or they're just saying, yeah, we'll get that to you eventually, and they're just stringing you along and haven't given it to you. And indeed, proceeding in a transaction without the requested information may, depending on the circumstances, be evidence of the lawyer's willful blindness under Rule 1.2d. On the other hand, if the client agrees, gives you the information, and then the lawyer concludes that the requested services will amount to assisting in a crime or fraud, then you have to either talk your client out of it, discuss the matter further with the client, or decline the representation or withdraw under 1.16. But a lot of times your client's not going to do that, right? And so don't assume that it's going to be pointless to follow up with the client and say, "By the way, you've strung me along about this a long time and I need the information." Don't assume the client will be unresponsive to remonstration. There's a lot of people who are just busy and procrastinate, and maybe if you follow up with them and explain in strongly worded terms that you need the information or you're going to have to withdraw, a lot of clients are actually going to come through and give you the information, and then you can proceed with the representation because there's nothing amiss. We have a recent New York State Bar ethics opinion from 2018 that may be in the background of why the ABA shifted their thinking about this. And basically they said, when a client refuses to authorize a lawyer to look into things or to assist in the inquiry, that's a very significant red flag for the lawyer. Okay, the ABA gives 5 hypotheticals that would be easy to turn into multiple choice questions. The first one is the easiest one. It's almost ridiculous. A prospective client has significant business connections and interests abroad. So this is somebody you haven't represented before. They've come in for a consultation. They've received substantial payments from sources other than his employer. The client holds these funds outside the US and wants to bring them to the US through a transaction that minimizes US tax liability. The client says, 1, he's employed outside the US but won't tell you how. 2, the money is in a foreign bank in the name of a foreign corporation and the client won't identify the bank or the corporation. And 3, he has not disclosed these payments to his employer or any governmental authority or anyone else and has not included the amounts on US income tax returns. Obviously, this is hitting every red flag and requires further inquiry. Here's a more subtle case. Hypothetical number 2, a prospective client tells the lawyer he's an agent for a minister or other government official from a high-risk jurisdiction. So this is a country that's on our terror watch list for state-sponsored terrorism, or is known for a lot of government corruption. And they wish to remain anonymous, would like to purchase an expensive property in the United States. By the way, this scenario is what was used by the group that did that expose of law firms that ended up getting turned into a 60 Minutes episode. The property would be owned through corporations that have an undisclosed beneficial owners. So we're going to use LLCs to hide the actual individual people involved or who get the proceeds from this. And then the prospective client says a lot of money will be involved in the purchase, but he's vague about the source of the funds, or the funds appear to come from questionable sources. Obviously, this requires further inquiry. The combination of risk factors known to the lawyer creates a high probability that the client is engaged in criminal or fraudulent activity. Hypothetical number 3. Oh, look at the pretty blue slide. This is going to be okay. A general practitioner in rural North Dakota receives a call from a long-term client asking her to form a limited liability company for the purchase of buying a ranch. Now, if you're thinking, wait, what's wrong with that? You're right. There's nothing wrong with that. You've known this client a long time. You're in rural North Dakota. If they want you to do a transaction, it's probably about buying a ranch. And so there's no reason to be suspicious. So the answer is this does not require further inquiry regarding the legitimacy. Unless this is a client who has done shady things with you before. Of course, you're going to have to ask for more details in order to carry out the transaction, like where's the farm and so forth, who's the buyer or who's the seller and all of that. But there's no reason to be suspicious in this case. Hypothetical number 4 is a little different. We're still general practitioner in rural North Dakota, and you get a call from someone you've never met before who wants you to represent them, and they're saying that they just won several $1 million in Las Vegas, and they need you to form a limited liability company to buy a ranch. This does require further inquiry. You should ask some questions. Why? Because it's such an easy kind of mamby-pamby cover to say, oh, I won all this money at Vegas, and that's why I'm bringing you brown bags full of, or suitcases full of cash, or something like that. And you should be suspicious that this is actually drug money or something like that. Why are they picking your county of North Dakota to buy a farm instead of investing the money in the stock market or a mutual fund or a thriving business in Vegas or something like that? It's a little weird. Okay, last hypothetical. A client in New York City, whose prospective client, you don't know this person, asks a general practitioner in a mid-sized town in rural Georgia. So you're kind of a country lawyer in Georgia, and somebody from New York City wants you to provide legal services for acquiring several farms in rural Georgia. The prospective client tells the lawyer he's a hedge fund manager. He's made a lot of money in hedge funds and now wants to diversify his investments by purchasing these farms. But he says he doesn't want his purchases to trigger a wave of land speculation that would artificially inflate local prices. So he wants to wire the money into your trust account, your client trust account, over time in a series of payments, and then asks you to create a series of LLCs to make strategic and things that will look unrelated acquisitions, so that people won't realize there's one person buying all these farms. It will look like different LLCs, and they're buying them over time. Maybe this is all legit, but it also could just be a ruse. And so this would require further inquiry. Okay, in sum, Model Rule 1.2 prohibits a lawyer from advising or assisting a client in a transaction that you know is criminal or fraudulent. That knowledge may be inferred from circumstances, including the lawyer's willful blindness or conscious disregard of available facts. And therefore, where there's a high probability that the client seeks to use the lawyer's services for criminal or fraudulent activity, the lawyer must inquire further to avoid advising or assisting such activity. And even if the information is not enough to create knowledge and subject you to discipline under 1.2, you probably need to make other inquiries. You may have a duty to inquire further under several other rules in order to advise the client, avoid professional misconduct, and so forth. And that concludes our lecture on this particular ABA